Today, we're addressing some pressing questions that have come up due to recent market volatility because of the announcements about tariffs. So let's dive right in. One big question is, how will the new tariffs affect the stock market in the short term and long term? The announcements about sweeping tariffs have already impacted the markets in the short term. All the major indices, including the Dow Jones Industrial Average and the S&P 500, have seen significant drops. These policy changes have led to a lot of uncertainty in the market, and investors don't like uncertainty. Therefore, markets sell off. The longer term effects will depend on how these tariffs influence different companies and different segments. Some segments might actually see opportunities for growth, while others will feel the pain of increased prices and decreased profits. So we will have to wait and see about the longer term impacts. Another question clients are asking us is, should I sell stocks now to prevent further losses, or should I wait out until the market stops dropping? It is only natural to feel anxiety when there is such a market downturn. We understand. We're right there with you. However, history has shown that it is important to stay invested throughout the downturn so that you can experience the good days in the market when they come. Data has shown that the best days in the market cluster right around the worst days in the market. And even if you miss a few of those best days, your portfolio can take a big hit on the performance side of things. So stay invested in the market as much as possible. Another question clients are asking us about is around cash. Should I spend the cash that I have and not rely on my portfolio for meeting my expenses? That would be a prudent way to go. See if you have cash reserves and rely on those instead of selling investments from your portfolio. However, if you do need to sell, please don't worry about it. Your portfolio has seen a lot of gains in the past few years that you can rely on right now. A related question that we have been asked is, what if we do have some cash sitting aside? Is now a good time to invest in the market? It can be. If you have extra cash sitting aside and you don't need it for the next 1 or 2 years, these markets can present an opportunity for you. They are on sale right now. However, we need to ensure that any additional investments align with your overall risk tolerance and your long-term financial strategy. The American economy will find a way through this tough period. If there is a trade war, it will end, or we will find a way around it. But this does present a good opportunity to invest for the long term. One last question I'd like to answer is, if I am making an investment, what should I be investing in? Which sectors will gain from the tariffs? And what are the best investment strategies? Our answer is always maintaining a diversified portfolio remains critical. This very downturn has shown us that while some segments can do so poorly, there are pockets in the market that will do better. Right now, these pockets are high quality bonds and high dividend paying stocks as compared to US growth stocks. So it is important to consider what your overall portfolio strategy is, where are some of the gaps that are being presented, and investing in those gaps. Regularly reviewing this allocation and adjusting your portfolio to align with your long-term goal is where the key lies. We know this may feel overwhelming, and we're here to answer questions. So please do reach out. Thank you so much for tuning in, and we'll keep you posted as things evolve. Thank you.